Okay, it's a 100-point cut that we're seeing on the Nifty. The Bank Nifty is down over 100 points as well. So let's just take a breather from tracking the equity markets and should focus to commodities. Manisha is here to tell us more about that. Manisha, good morning. What are you looking at?
Morning, Sonia. I'm looking at crude oil prices because so much happened over the weekend and more expected during the day today. But look at the prices because we've seen 5% of gains in the previous week and we've started the day on a very positive note yet again. So 86 holding for the Brent and 80 to 81 is how we're looking at the WTI crude oil prices also. Well, OPEC over the weekend has delivered on what they decided in the OPEC and allies meeting, and they said that the production will be unchanged. So what they had decided in the November meeting, that 2 million barrels per day of a cut is what they are looking at in November, and that would go through into 2023 is what the markets are sticking on with right now. But remember, OPEC will continue to come and talk about various things, especially as the street readies itself. You have the price cap coming into action today. We have seen that come in from the European Union and G7, and various other countries seem to be supporting it as well. So that comes in force from today. As of now, we do understand that the Russian Urals are trading at around $66 per barrel, and the G7 has agreed to impose the price cap at around $60 per barrel there. This is going to be enforced also by G7 and Australia, apart from the European Union, 27 countries there. And the whole deal around this is that this is going to be reviewed every 2 months. So now the next review really comes in for the month of January. What they have also decided is that they will keep the price cap 5% below the market price. So that is exactly how it's working right now. But what you have to watch out for is that there is also coming in an embargo on imports of Russia crude by sea. This is what European Union also is putting in force today. The European Union also has said that on 5th of Feb, not just crude oil, but the crude oil products, petroleum products as well, is something that will completely embargo on. So as of now, we do understand that US, Canada, Japan, Britain also have plus sanctions on Russian crude by sea. All of that comes into impact starting today as well. Russia, in the meanwhile, has said that they will not accept the cap, but will cut production to all of these countries going forward. We still are awaiting a formal notification from Russia onto that there. This is what exactly said. The European Union, while they have cut Russian crude products, Russian crude oil from today, on 5th of Feb, they will cut the Russian petroleum products as well. So the sanctions will only get stringent as we move forward from here. But the crude oil prices as of now also taking support from the COVID curbs easing in China. That seems to be supporting demand as well. And when you look at the next year outlook, whether it's from Citi, Bank of America, Credit Suisse, they all are looking at higher crude oil prices going forward. Anywhere between $96 to $110 per barrel of an average price is what many of these brokerages are forecasting.
All right, Manisha, thanks very much for that. So China and commodities, I mean,